We are joined by Jagannathan Chakravarthi, the CFO at Sonata Software. Mr. Chakravarthi, thanks a lot for joining in. Welcome to CNBC TV18. First, I want to ask you about any signs of a slowdown in Europe. Over 20% of your revenues comes from there, and Europe is going through a challenging period right now. What are the demand trends looking like?
Yeah, particularly in Europe, UK, we are more based on UK. We have not seen that much of slowdown in the ground. That slowdown, in my view, reflects in your contract cancellations or contract deferments or rate renegotiation, discounts requests. All these things are what we see in the ground. Not much is happening on the. It looks no negative news as such coming out of the market now. Overall, also the US market and the Europe market together, the ground level, it doesn't reflect the kind of what it is coming out. However, there are other challenges like cross-currency impacts or heavy, particularly GBP to US dollar is quite sharp. As well as the supply side is not like it is better than what it was in Q1, but still there are challenges on the ground. And so all these things, many factors play in Attrition. Other than that, the demand side is not completely reflective in the ground Attrition.
There's no contract deferment or cancellations that you're seeing just yet, but are you noticing any delays as far as client spending is concerned?
Not exactly, but no, there will be some contract you will be in, some contract there will be some deferments or delays, something will be there, but the ground level, it's not that anything major is happening. If it is there continuously in one geography, couple of customers come back and there is a deferment of it, then it will be more reflective on the situation. It's not there in the ground. However, we are reading the same economic data and same whatever you are reading, we are also seeing the same thing. What we believe this later part of the year or next year, probably there can be some kind of a slowdown maybe there for couple of quarters. However, the overall digital transition, what is happening is a completely cloud-based transition, which is a medium term, actually an opportunity for the IT companies, which we still believe that it's intact. There can be a couple of quarters of no demand slowdown in the next year, and it has not seen anything at present in the ground.
All right. Hi, Mr. Chakravarthi. Good to hear there is no deferment. You're sounding, that things are not that bad, at least out there. And at least as of now, you're not seeing any big hit to business. So that's good news. So let's get to a couple of numbers then. Your international IT services business, that's the driver in terms of profitability. Now, the last couple of quarters, well, margins have seen a bit of a pullback. I believe you have taken already the wage hikes. So your employees will be pretty happy out there. Since that's behind you, what is the margin trajectory we should look at for your international IT services business, point number one? And also, what is the growth, the constant currency growth? I think the dollar revenue growth in the first quarter was around 2%. For the year, what can the number look like?
Yeah. Okay. First, regarding the margin, we have given guidance that last year, EBITDA without other income and forex was around 24.5%, and this year we expected between 20 to 22%. Considering the salary increase, wages, attrition, replacement, supply side issues, and also our investments in a lot of leadership investments what we have done during this current year. So this is the guidance. We maintain the guidance for the whole year. We don't give the whole year revenue guidance. However, we do with for the last quarter, you said 2% quarter on quarter, but on the constant currency it was around 3.8% actually. So the ground level, we expect to do better than what we did last year.
Much better, sir. How much better, Mr. Chakravarthi? The last time as well, you said you'll do better. How much better? Can you maintain this this kind of momentum? As you said, 3% I think constant currency is what you have done. 2% dollar revenue. Can you maintain this sort of a run rate?
Actually, we are not seeing any major negatives, hurdles coming forward at present. We have to see how it unfolds in the next few quarters. Overall, for the year, we expect the demand. We expected to do better than what we did last year. Last year, we did organically in high teens. Actually, we expected to do a little better than that this year.
So this
we are not giving guidance for this year.
Sure. But this margin guidance of 20 to 22% is much less than what you did not only in FY22, but also in this year, you had almost, actually in the last year, you had almost 30% margins at one point in time. When do you think you can come back to that range?
We have explained that because of the demand supply side constraints and the salary increases and the attritions and all these things, there will be some cost increases, as well as we have done some investments for this year. We expected that there will be some the recovery will on the margin strength will start coming in from the next year, beginning of the next year.
So are you having more wage hikes in Q2 and Q3?
Not exactly. We have not planned any wage hike of it, but we have to be flexible and see what is the situation, how is that, attrition and supply side constraints happen. Maybe we will take some measures for pockets or sector of people, depending on what is the current situation. We are more flexible to see and address the issues as it comes in.
Mr. Chakravarthi, if you're not going to be giving, larger wage hikes, then you must be reasonably optimistic that peak attrition levels are behind you. Is that your understanding, or are we reading that correctly? I think in the first quarter, the annualized attrition level was around 24%. Has it peaked out? Will it start cooling off from here on?
We expect it to. That's what it looks like for this current quarter. It is better than what it was in the last quarter. And Q4 to Q1, there was an improvement, and Q1 to Q2, we see there is an improvement in the attrition level. But we have to wait and see how this will emerge in the future quarters also, because with so much of impact happened on the supply side, we want to be a little cautious in making this kind of what is happening in the coming quarter. But it is better now compared to what it was last quarter.